Welcome back. In our top business story, as the Dubai International Air Show rolls into its second day, a host of UK companies are over to tap into new industrial partnerships with the UAE. The UK delegation is also looking to strengthen existing ties, according to Industry Association UK Trade and Investment. Additionally, the UK is presenting its latest aviation security capability, which builds on UK technologies to deliver a significant advance in aviation security. Richard Paniguiun, head of the Defence and Security Organisation, said that the UK has a significant range of world-class products across the air, land and maritime security sectors, and that the UK wishes to be a key partner in the Abu Dhabi Vision 2030. Meanwhile, European aircraft maker Airbus sees demand for 1,920 planes in the Middle East over the next 2 decades, worth $347 billion, it said in a statement today. One of Airbus' biggest customers is Emirates Airline, by far the largest buyer of its A380 Super Jumbos. Airbus added that regional carriers appear keen to maintain their expansion plans despite slowing global economic growth and some banks facing tighter liquidity. That was only a short-term issue, Airbus said. Demand for new jets is still sky high in the Gulf region. Only yesterday, rival Boeing received the largest single order by value in its history. Emirates ordered 50 wide-body 777 jetliners worth at least $18 billion. Dubai-based air service provider Donata has announced a global investment injection of over $70 million. Donata offers ground handling, cargo, travel, IT solutions and flight catering. And this new investment amount across its bases in 38 countries will include a number of major investment projects, according to officials. 142 million dirhams has been allocated to Donata's ground handling operations in Dubai and another 5.2 million to Donata's cargo operations. Donata is the world's 4th largest combined air service provider. With that, let's now look at the stock markets here in the UAE and across the region. Markets opened lower this morning despite some political clarity emerging from Greece and Italy. Investors are eyeing former European Commissioner Mario Monti's every step in forming a new Italian government of technocrats today. We asked Gaurav Kashyap, head of DGCX trading at Alpari Middle East DMCC, what this all means for the single currency, the euro, and what markets are facing this week.
We've seen high-yielding assets, including the euro, all moving lower against the US dollar. Even commodities have slowed down against the US dollar. And this is primarily because of a report by rating agency Moody's, who said that the EFSF would not have enough funding power at low enough borrowing costs to support the entire Eurozone. So naturally, we've seen investor sentiments depressed since the start in Asia. And slowly but surely, the European session is showing some slight gains. Earlier in the day, we also had the Eurozone industrial production number, which came negative on the month-on-month, and it also slowed on the year-on-year number. This is going to be a key bearing on tomorrow's Eurozone GDP reading, as well as the German GDP reading, which is releasing on Tuesday. Overall, we've seen global growth slowing across the board. Emerging markets have been slowing down. China and India have both reported slower growth figures from last month, and we can expect more of the same coming from Germany tomorrow. Analysts are expecting almost up to 0.5% drop in GDP growth, and we'll be watching that number. Already we have troubles with the Eurozone sovereign debt crisis, and the global growth story should continue to weigh down sentiment with regards to Euro-USD pairs. We're also going to be watching the UK, Eurozone and US CPI readings later in the week, but by far the main story will be the global growth story. We continue to watch for buying opportunities in gold between 17 and 1750, and otherwise we like the euro to probably test 133 to 135 tranche in trading this week.